Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. It's always fascinating seeing what the big super funds are doing with their members' money. UniSuper is one of Australia's largest funds, investing more than $115 billion on behalf of about 620,000 members. They've recently announced a $1 billion investment into mobile towers in Europe. I wanted to talk to UniSuper about the investment, about why infrastructure is so important for a big super fund, and how they go about finding global assets that represent good value for their members. Sandra Lee is Head of Private Markets at UniSuper. Sandra, welcome to Fear and Greed.
Thanks, Sean. Thanks for having me.
We don't normally talk about a person's job title, but given you're Head of Private Markets, it is worth taking the very first step and explaining what private markets are all about, because many people listening to us hear us going on about fixed income and bond markets and equities and that type of thing. Where do private markets fit in?
Absolutely. Firstly, I lead the private markets team here at UniSuper, and what that means is it's a business that incorporates both infrastructure investments and private equity. And you hear the word private a lot. That's because I work in investments that relate to unlisted investments as opposed to listed investments on the stock market.
And so for most retail investors, and many institutional investors too, the only way actually to access that sort of investment is via big fund managers like superannuation funds or other providers.
Absolutely. It's very difficult for retail investors to access unlisted investments because they tend to be really large scale, and you're really needing fund managers or institutional investors like a big super fund to be invested in these sorts of investments.
Yeah. Okay. So that's where private markets fits in. Infrastructure is part of that. We all hear a lot about super funds taking stakes in infrastructure projects. Why does super like infrastructure so much?
We like infrastructure because it's sort of large-scale projects, and they tend to exhibit a lot of defensive characteristics. And what we mean by defensive is they're resilient. They tend to provide our members and our investors long-term stability. And why we like it unlisted as well is because there's reduced volatility compared to sort of holding infrastructure from a listed perspective.
Okay, so reduced volatility, long term. You spent $1 billion taking a stake in Vantage Towers. Why mobile towers? Well, tell us about Vantage Towers to begin with, and then why mobile towers?
Yeah, absolutely. So Vantage Towers is one of Europe's largest mobile towers businesses. It operates in 10 different markets or countries. As infrastructure investors, we like mobile towers because they facilitate, obviously the use of mobile phones. And as you know, data is becoming a global thematic. We need more data as we're talking to one another and streaming sort of movies and music. So it's an essential part of day-to-day life. And from our perspective, it's core infrastructure.
So who did you buy it off? And this sort of infrastructure project, towers, presumably it's kind of a growth industry, I suppose.
Yeah, absolutely. It is. As the global data demand increases, right, people are investing more and more into sort of mobile towers because everyone's on their mobile nowadays. So from our perspective, it's defensive, it's resilient type of investments, and it's, as I sort of said, very core infrastructure.
Stay with me, Sandra. We'll be back in a minute. My guest this morning is Sandra Lee, Head of Private Markets at UniSuper. So UniSuper, am I right in saying you haven't done a lot of investing in Europe? Is that right? And if that's the case, why this time?
Yeah, no, absolutely. We have invested in Europe, but via our global listed portfolio. So we have listed shares. But why we sort of had a little bit of media on this one is because it's the first unlisted large-scale infrastructure investment into Europe.
So why do it? What's the reasoning behind it? I mean, I get your reasoning, but it's kind of must be slightly scary going into a whole new geography.
Absolutely. For us, we're very opportunistic investors. So we look at how we can access quality investments at sort of attractive pricing. So this came about through UniSuper's contact with some of the large institutional fund managers. In this case, KKR, a big US private equity firm. So they brought the deal to us. They had a partnership deal with Vodafone. It was very opportunistic, and we liked it. And we've got strong partners that will invest alongside UniSuper, including KKR.
Okay, so you invested with. Are there any? I mean, when you start talking about private equity, there, as an investor looking at these mega deals, are there some people you like to buy with and don't like buying from?
Yeah, look, I think that's a fair question, Sean. I mean, we like to align ourselves with, a co-investor that sort of shares similar objectives to UniSuper. We are long-term institutional investors, so we don't like going in for 2 years and then flipping the investment, because we like sort of growing the business with like-minded investors. And KKR's got a very long-term infrastructure fund as well, so they share a lot of similarities to our investment model.
Okay. So what other sort of infrastructure assets globally are you invested in or looking at?
Yeah, we've got another global US-based toll road. So that's an investment called Transurban Chesapeake within the greater Washington area in the US. UniSuper bought that from Transurban a couple of years ago. So that's, again, quite core infrastructure for us.
Okay. You've also got airports. I mean, that's local though, isn't it?
We've got a large unlisted airports portfolio, including Sydney Airport, half of Adelaide Airport and Brisbane Airport. So you may have sort of seen in the press, Sydney Airport was listed before. About a year and a half ago, we joined a consortium, or rather the consortium invited us to be a part of the take private. So Sydney Airport was essentially delisted. UniSuper was Sydney Airport's largest shareholder, but we wanted to stay in the asset even after it became unlisted. So we basically flipped our equity from listed Sydney Airport to unlisted Sydney Airport shares.
Yeah, and I remember your support was very vital for that deal. How has Sydney Airport performed since it's gone private?
From our perspective, it's performed well, but for all airports, not just in Australia, but across the globe, obviously suffered heavily during COVID when, countries and borders were locked down. So fair to say the last year and a half has been a good recovery for airports across the globe, and Sydney Airport's had a strong rebound as well, and we can see international traffic recovering pretty strongly at Sydney Airport.
Okay. Now, another asset in the portfolio is forestry, which I've got to say I know nothing about. What is it? What do you like about forestry, timber plantations, that type of thing?
Yeah, from our perspective, forestry sort of behaves quite defensively, like how infrastructure investments actually perform. So they tend to be long-term assets, right? Because the world's pretty short of fibre. And as you know, you need a lot of quality wood for your construction industry as well. So UniSuper's got a growing portfolio to forestry assets. We have a big asset here in Victoria called Hancock Victorian Plantations, and 2 other forestry assets in New Zealand. And the New Zealand ones tend to be exported, so they supply the Chinese market, but also the domestic sort of market in New Zealand. Ultimately, we like the global thematic around the world sort of becoming short in fibre. Like you need packaging, you need paper, and wood is sustainable. So we like that particular aspect of it as well. And we think going forward, there's carbon credit optionality.
Okay, so I'll come to the carbon credit optionality in a moment, which is really interesting. But everything that you've been talking about, so mobile phone towers and forestry and infrastructure, they really are of the same ilk, aren't they? I mean, you must have an investment philosophy that allows these things to fit into it.
Very much so, Sean. I mean, they tend to be large-scale assets. They tend to enjoy preferred market positions, as in if you're owning an airport, somebody else can't from down the road come and build another airport right next to you. So, we like that sort of defensive characteristics. They're resilient, they're stable, they provide an essential service and facility to the economy and to the social fabric of a particular nation. So, for all those characteristics, we see the same sorts of characteristics within forestry and timberland assets as well. But, having said that, we have to be very clear. We don't invest in any native logging. They all have to be sustainable plantation forests.
Okay, so this brings us to carbon credit optionality. As a fund, how do you think about the greening of the economy? Do you think of it in terms of as an investment, or do you think of it as a responsibility for such a large fund manager?
I think all of the above, Sean. I mean, it's obviously really important as the whole world is transitioning into the new economy or the green economy. So, and super funds play an important role because we're large scale investors. And in many ways, UniSuper is very big on its ESG and responsible investing. So for the companies that we have a strong ownership or shares in, we can play an active role in encouraging boards and management teams to transition and do the right thing.
Sandra, thank you very much for talking to Fear and Greed.
Thanks, Sean.
That was Sandra Lee, Head of Private Markets at UniSuper. And of course, always seek professional advice when you're making any investment decision. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.